Hello, listeners. Welcome to the Pre-Market Update. The podcast is powered by AI. I'm Joe.
And I'm Sarah. Today is February 9th, 2026. Let's dive in.
Market overview. It is looking like a blockbuster Monday for the Indian markets, Sarah. We are seeing a massive gap up start. The Sensex has jumped over 600 points in early trade, while the Nifty 50 is knocking on the door of the 25,900 mark. This 0.7% surge is largely fueled by incredible optimism surrounding a new India-US interim trade deal. Looking at the GIFT Nifty, it was actually trading at a 212-point premium earlier this morning, so the momentum was expected. Within the Nifty 50, we're seeing a broad-based rally, but the real heavy lifting is being done by PSU banks and metal stocks. For those tracking the F&O space, the cues are decidedly bullish as we see short covering combined with fresh long positions. The Sensex has already touched a high of 84,022 in the opening volatility. It's clear that the risk-on sentiment from Wall Street has traveled across the oceans and landed right here onto Wall Street. Investors are also digesting the fact that we are seeing sustained buying from both domestic institutions and now, potentially, a return of global funds looking to capitalize on this trade optimism.
International markets, Joe, that optimism is definitely a global theme today. Over in the US, the Nasdaq and S&P 500 closed the week on a high note, with risk assets, everything from tech giants to Bitcoin, seeing a massive influx of capital. Bitcoin is actually helping lead that charge as digital assets become more integrated into institutional portfolios. Meanwhile, in Asia, we are seeing history being made. The Nikkei 225 has surged to record highs following Prime Minister Sanai Takaichi's landslide election victory. The market is betting on her spending-first fiscal policy. In Europe, the FTSE 100 and DAX are expected to open higher, tracking these Asian cues, though there is some chatter in London about smaller growth market companies moving back to the main exchange for better liquidity. Looking at commodities, we have a major milestone. Gold has climbed back above the $5,000 per ounce mark as dip buyers return after a volatile week. Also, keep an eye on soybean oil futures in Chicago. They've hit a 6-month high because India just agreed to cut import duties on U.S. supplies as part of that trade deal you mentioned. In currencies, the yen is hovering near the 160 level, which is keeping Japanese exporters very competitive but raising some eyebrows at the Bank of Japan.
Business story. India. Focusing back on the domestic front, the India-US Interim Trade Pact is the story of the year so far. This isn't just a piece of paper. It's an agreement that targets non-tariff barriers and provides long-term tariff visibility. This is why we're seeing over 30 specific stocks, particularly in the agriculture and export sectors, being flagged as must-buys today. For instance, the duty cut on U.S. soy oil is a strategic move that stabilizes domestic prices while strengthening diplomatic ties. We're also keeping a close eye on the Nifty 50 heavyweights. Reliance and Tata Steel are seeing increased traction due to the global metal rally. Interestingly, veteran investor Vijay Kadia has been speaking about his SMILE framework, which stands for small in size, medium in experience, large in aspiration, and extra large in market potential. He's advising investors to ignore the daily noise and focus on earnings inflection points. It's a great reminder as we see this 600-point jump. The big gains are often made by those who have the patience to sit through the volatility. We're also seeing PSU banks like SBI and PNB lead the charge, as the interbank borrowing environment remains healthy despite global shifts.
Business story international. Moving to the global corporate stage, the big headline from Hong Kong is the debut of Montage Technology. This Chinese chip designer saw its shares soar by a staggering 57% on its first day of trading, raising nearly $1 billion. This shows that despite geopolitical tensions, the appetite for high-end semiconductor players remains insatiable. In the M&A space, FedEx and Advent International have teamed up for a massive €7.8 billion deal to acquire the Polish parcel locker giant, InPost. This is a huge bet on the future of European e-commerce logistics. We're also seeing a very interesting strategic shift in the wealth management space. Apollo Global Management is partnering with Schroders to sell private market funds to wealthy individual investors. It seems the democratization of private equity is moving full steam ahead. And we can't forget big tech. Following the earnings Super Bowl, it's clear that companies with a superior hardware play in the AI space are the ones currently taking the crown, while software firms are starting to feel a bit of pressure from rising default risks in the private credit market.
Economics and geopolitics. On the policy front, things are getting complicated between China and the U.S. Chinese regulators have reportedly advised their domestic banks to limit their holdings of U.S. treasuries. This is a major geopolitical move aimed at reducing exposure to U.S. market volatility, and it's already causing treasury yields to fluctuate. If China continues to pull back from the U.S. debt market, we could see a significant impact on global borrowing costs, including here in India. Back home, the RBI is likely watching the India-U.S. trade developments very closely. While the trade deal is a win for growth, the fiscal implications of duty cuts need to be balanced. Meanwhile, in Japan, Takaichi's supermajority in the lower house, the largest win since World War II, gives her a clear mandate for aggressive government spending. This Takaichinomics could be a double-edged sword, great for Japanese stocks, but potentially inflationary for the rest of Asia. Investors are essentially giving her the benefit of the doubt for now, but the bond markets are staying cautious.
Key takeaways. To wrap things up for our listeners, here are the 3 things you need to watch today. First, the Nifty 50's ability to hold the 25,900 level. This gap up is strong, but sustainability is key. Second, the ripple effect of the India-US trade deal. Look beyond the headlines at specific sectors like agriculture, metals, and PSU banks, which are the primary beneficiaries. And third, keep a very close eye on the global bond market. China's distancing from U.S. Treasuries and Japan's new spending plans mean that interest rate volatility is far from over. It's a risk-on day, but as Joe mentioned via Vijay Kadia, the marathon winners are those who focus on the long-term earnings story rather than just the opening bell excitement.
That wraps from today's update. I hope you gained useful insights.
Add your thoughts and comments and follow for more such updates. This is Sarah.
And Joe, signing off.